Hey there, folks. This is Mitch Firestone with Precision Trading Labs in New York City, and I am going through our sector analysis screen here just to see kind of where the various sectors are sitting in order to find pockets of relative strength and relative weakness. Obviously, looking at the market here, we've obviously been going through a bit of a downtrend. Obviously, the last week or so, there's been a nice recovery, but overall, the market is certainly down from where it was approximately 4 or 5 weeks ago, and that's evidenced here, of course, by the various sectors that I've laid out here. So these are your basic sectors: financial, energy, all that, utilities, all that kind of stuff. And so we can see here for the last rolling 4 or 5 weeks here, with the one exception of energy, which is actually up about 11%, everything else is down. These are all down about 3 to 8%, and then right here where this blue dot is, this is the S&P, which is down about, I guess, about 3.5, 4% from where it was about a month ago. And then you can see up here there are a few three sectors here, all of which are down, but not down quite as much as the S&P. And again, the only thing that's shown any strength at all, and that's positive, is energy. And so as a result, one of the things we like to do, of course, is to more or less go with the flow. And so basically looking for pockets of relative strength. So we're going to basically look for setups in the energy sector, and then within the energy sector itself, we're going to look for symbols that are actually showing relative strength even within that energy sector. And what we're going to do is look for pullbacks in lower time frames in order to drop down to buy levels for us, which are demand zones, in order to then rejoin the upward move. That's the predominant trend. So I'm going to kind of show you what we're looking at here, and I'll show you a couple of setups that we are looking at here. Before I do that, of course, the ubiquitous disclaimer here: Precision Trading Labs. We are not financial advisors, fiduciaries, broker dealers, all that kind of thing. And everything I'm showing you here, of course, is for demonstration and educational purposes only. Okay. So at any rate, let me show you what we're looking at here, and I'm bring up my screen here. And so what we have here. This is my work area where I actually break out various sectors. And so what I have here, here's the energy sector. Here's the XLE, of course, which is the ETF of the energy sector. So essentially, this is essentially a proxy for tracking the sector. And then, of course, these below here are about 2 or 3 dozen symbols that are under the hood of the XLE. Okay, so if you go onto the Spider website, you can actually go and see all of these symbols here, and that's where I got them. I just kind of basically cut and pasted them and dropped them into my watch list here, and that creates a work area in order to monitor the XLE. Okay, so at any rate, here's the XLE itself, and let me just bring up the daily chart on that. And so here's what we've been looking at here. So, of course, here's our three main moving averages: the 200, the 50, and the 20. And so that just kind of gives you an idea of where things are. And so this is what we've been looking at, and this is where we are, of course, today on February 8th here. We're about midway through the session here. On Tuesday afternoon on the 8th here. So right here we have an area where price rallied up here. This is a little area of consolidation. And then notice this very, very energetic bullish candle here. That's indicative of a very bullish move. There was a huge surge out of there. And so the way we look at the markets and the way we look at price action is that right here, this was an area of kind of an equilibrium where supply and demand for shares were kind of in balance within this relatively narrow range of about $1.40 or so a share for the XLE. And then all of a sudden, something happened here. Price, obviously, there was an exhaustion of sellers. The sellers disappeared here, and all that were left were buyers. And essentially what happened was buyers ran up the price chart until they encountered willing sellers. And that's how this how this large green, very bullish, aggressive candle got formed. And then we had a little pause there, and then a little further move up here until it actually hit a little area of supply. And so we can see it now. It's actually reacted to that, and it's actually starting to head down again. So what we're waiting for here is a pullback into this area, because we expect that because price only spent about 3 or 4 days here, and we had this very, very bullish move out of here, a reasonable percentage of the time, there is still some upward price pressure that's just waiting to be tapped here. Because of the fact that price left here with a great deal of energy and suddenly. It didn't just kind of grind out of there. It was almost like flipping a switch. For 3 days, we were kind of at equilibrium here, and then all of a sudden, the switch got thrown, and essentially the sellers just disappeared from the zone. And so as a result, basically, when price raced up here, it's quite possible that not every body or every institution that wanted to buy down here had the opportunity to do so because price left suddenly. And so as a result, when price gets back here, a reasonable amount of time, that what will occur is that we'll then get another round of buying here, another round of demand. And so this is a zone that we've laid out here within this range of about $1.40 or so. So we're waiting for a pullback into this zone. And this would be essentially a buy area to buy the XLE here. Okay, so this is, and of course, one can express this trade in one of two ways. I mean, obviously, there's an infinite number of ways one can express this. But in terms of the most common positional ways, obviously, we can either go long on the stock here or simply buy an XLE call. Okay, so that's the two ways of expressing the trade here. Okay, and then the way we would lay this out here is that this would be essentially right here. Here would be our entry around 65, 62, and then we would then lay out and then put in, of course, a protective stop. And then so I would probably give this about an extra quarter or so of wiggle room down here. And so essentially, this is what our trade would more or less look like here. Let's blow this up a little here. So here's our long entry right here, and then here is our stop out point. We would put that up probably maybe just a touch below 64 or so, and so maybe 63.95 or so. So essentially, this is what our trade would look like, buying the XLE. Here's our entry, either buying long stock or our entry point for buying a long call, and then we would have our stop out point right down here. Okay, so that's for the XLE. And as I said when I led off here, one of the things we actually want to do is, while the XLE is strong, within the XLE itself, in terms of its portfolio companies, there are some that are even showing essentially greater strength in the XLE, and we can think of that as relative strength. So you can see XLE here is sitting about 7.5% off of its high for the last 52 weeks. This is the 52-week channel right here. So you can see this is around the 92.5 mark. So that shows that it's about 7.5% off of its yearly high, okay, for the rolling year. Okay. On the other hand, Marathon, Valero, and Chevron, these are all sitting only about 4.5 or 5.5% off. So this is about 7.5% off. These are about 4.5 to 5% off. So these are actually exhibiting relative strength versus the XLE. So in fact, we're going to look for some setups here, and I was looking for some setups here earlier in order to then wait for lower time frame pullbacks in order to then get long in some of, let's say, these symbols above here that are showing relative strength. Okay, so here's Marathon. Let me just kind of show you what I was looking at here earlier. Come on. Waiting for them. There we go. Okay, so here is the daily chart of Marathon here, and let me bring that up here. And so right here, this was an area, and again, Marathon has shown, again, I showed you the relative strength that it was exhibiting. And so right here, you can see this kind of looks relatively similar to what we were looking at on the XLE. Again, this area of relative strength of this area of consolidation, and then notice that we had this very bullish pop, and then actually a gap that followed from here. Okay, so this is an area of one place where we would look at as a potential buy zone in the daily chart. But in fact, I actually brought this up in a 2-hour chart, and in fact, right here, here's that area that I just showed you in the daily. But if we actually zero in right here, excuse me, right here, notice price popped here. Notice this little area of consolidation. Notice we have this bullish candle there. And notice, of course, then that's the origin of that gap. And so right here, this was an area of price rallied, consolidated briefly for a couple of hours. The day ended here, and then the next day, of course, there was a gap, and then it continued up. So if we can get a pullback back to this area, this is an area where there's some major upward price pressure that's waiting to be tapped. Okay, and we can even see right down here, if we kind of look at volume, we can see volume down here where it consolidated, and then notice then we got this volume pop as price rose out of here. So for all the above reasons, we're actually kind of enthusiastic about this particular level. Okay, and again, looking at this in the same way as I showed you before the XLE, here would be our setup right here. So right here, this would be our entry point at around 73.62, and then we would give it a little extra wiggle room underneath the zone that we drew. Maybe just give it an extra dime or 15 cents. And so essentially this would be what our entry would look like, more or less. Okay, so right here, here's our entry, here's a stop out. And then what this ladder is actually showing us here is what our risk reward is. This is actually a useful hack that somebody showed me years ago using the Fibonacci retracement tools. We're not looking at Fibonacci retracements here, but all we're looking at here is multiples of how much risk we're giving to the trade. So if the risk here is 72 cents from 72.88 to 73.60, each increment of 72 cents represents one multiple of risk. So if you got a pop up to here, this would be a 1-to-1 trade, a 2-to-1 trade, a 3-to-1 trade, etc. And in fact, just to show you, if it actually got to the next area of supply, which is sitting overhead, if it actually got that high, that would probably represent probably about a 7-to-1 trade here. And in fact, I'll show you here what that looks like right here. Change that to about 7-to-1. That should be about that. And right there. Okay, and so right there, this if it actually got that high, this would be about a 7-to-1 trade. Of course, no one is expecting that's necessarily going to happen. But what I'm showing you here is, of course, this using the Fibonacci tool, this hack, you can basically set this thing to actually show you effectively have it be a little visual risk reward calculator. Okay, and the last setup that we were looking at here is I'll show you here is Chevron CVX. Okay, so here's CVX. So I was looking at this first in the daily chart, and we bring that up here. Okay, so in the daily chart, nothing really jumped out at me immediately. There's certainly this area right here. Just mark that here. There's certainly this area right here, but in terms of me finding my setup, I don't see it. And it's really just because I'm not seeing it in the daily chart. So what I basically did was just drop this thing down to a 2-hour chart. And when I do that, then I'm seeing my setup here. And that's right here. Okay, so let me just move that over here a little here. So right here, price, right here, from this level here, price dropped down here. Okay, we got this consolidation. Notice that very, very bullish action out of there. And then, okay, and you can also see we've made higher lows and higher highs here. So we're basically waiting for a pullback here. And again, two ways of expressing the trade. We're waiting for a pullback to either buy long stock or to buy a call when it gets to this level here. Okay, and again, this will be our stop out. So if it doesn't work, we pull the chute right here, and we take a small loss. On the other hand, if we get what we expect happens, we will get a bounce out of here, and then with any luck, it'll bounce up at least to 2 to 3 to 1, and we'll have a successful trade. Okay, so at any rate, that's what I got here. So I hope you found this useful and interesting. And this is Mitch Firestone, and I will see you guys next time. Thanks a lot. Bye.